Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Brock Shimano. Today is Monday the 3rd and we have the market moving higher here. Let's take a look at the trading platform, see where we closed off the day. Corn for March delivery trading up 1 3/4 cents, soybeans up 10 cents, wheat in Chicago trading up 8 cents, and Kansas City wheat trading up 8 3/4. Today we did have export inspections released today. Brock, did those affect the market?
You know, I don't think it really was very positive for the market at all. We saw corn, wheat, and soybeans all miss the analysts' expectations. Corn came in at 21 million bushels exported, wheat at 11.6, and soybeans at about 45 million bushels. You know, the thing I'm going to take away from this report is soybeans and wheat continue to miss expectations. We've seen this be a trend over the last month and a half or so, especially in the wheat market. We've really slowed down from a torrid pace of exports that we had earlier in the year for wheat and for soybeans. And I think that's going to continue to be a theme as we move towards the end of the wheat marketing year and further into the soybean marketing year as more Brazilian beans come into the market. You know, as far as what was driving the market today, more specifically, I think weather in South America was a main contributor there. If we take a look at this weather map provided by Planalytics, you can see that there's hot temperatures for the northern part of Argentina, the southern part of Brazil. That area is still in the mid part of their growing season, whereas a little bit farther north into central Brazil, they're harvesting already. This part that's going to be experiencing the hot temperatures is still in the mid part of their growing season, so I think that's really what was propping up the soybean market here today.
That sounds fair enough. Now, weather could be moving this soybean market higher, but I would be very skeptical here since the forecast is more of a short-term forecast where we're going to see that heat. In the 11 to 15-day forecast, we are going to see a little bit more moisture move into that region and a little bit cooler temperatures. So I think that as we move through this heat, we're going to start looking more and more ahead, and that is going to be a little bit more negative when you look at the prices for soybeans. The other thing I want to keep in mind here is that we have moved a little bit higher. We seem to be testing that 13. I think 13 is going to offer up significant resistance, and I really feel as though if you're a producer out there that's a little bit undersold, you might want to think about locking in some sales around that 13. We've had a nice 3-day rally here the last few days. So if we get up around that $13 price level, I think it would be wise to perhaps pull the trigger, maybe get into some hedges here and protect the downside. When you look at the fundamentals here, Brazil, we're seeing forecasts for Brazilian crop. It seems to be growing here. We saw really 91.6 million metric tons from AgroConsult. They're forecasting Brazilian crop to come around 91.6 million metric tons compared to the USDA forecast of 89 that we saw back in January 10th. So the bottom line here is we're seeing a lot of soybeans out of Brazil. That number seems to be growing a bit. I think that's going to put some pressure, and we're seeing ships getting ready to export those beans out of Brazil, especially the northern parts of Brazil. And I really think that that's going to start weighing here on U.S. prices. So I think there's a little bit more downside risk, and 13 looks like a really reasonable level if we can get up there.
You know, I'm right with you there, Cody. We seem to be running into quite a bit of technical resistance areas here. $13 is a big whole psychological number. We also have the trend line above us right at $13.05. And then we have the 50-day moving average, which is right around $13 as well. So I think this area is going to be very technically big area of resistance on the technicals here. And like you said, fundamentally, we're starting to see exports leave the country of Brazil. I think we're starting to see that show up in our export inspections. You know, this week we missed expectations again. And I think we're starting to see it show up in our export sales. Some of those sales are starting to move to South American books. I think that's really going to continue to put pressure on this market. You know, $13 looks like a very good area to make some sales here.
That sounds fair enough. Guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, you can take a demo of the trading platform here. It is available for your mobile mobile device, whether it be an Android or iPhone or a tablet or even your desktop computer. So go ahead and take a demo at grainhedge.com. We look forward to speaking with you. Do remember that Informa numbers are coming out tomorrow. We will be updating you on Twitter. Thanks a lot. We'll see you tomorrow.